This week on the $1 Million Plan, it's our year-end investment wrap-up. And if we're going to do a year-end investment wrap-up, we're going to tap a financial expert all over the interwebs. He just happens to be in central Indiana where I'm at. The last time we saw each other, we were at Clues Hall watching Alton Brown cook. So, I mean, why not have him on the show? His name is Tadas Viskanta from abnormalreturns.com. He joins us now in studio. Tadas, hello.
Peter, thank you for having me.
You were on the show a couple years ago, weren't you?
I was on the radio, yeah.
Yeah, excellent. All right, well, you're back. Abnormal returns. I will not do it justice if I try to say what it is, but it's a very significant thing in the financial world. Help us understand exactly what it is.
Well, it is my daily take on the best of the financial web. That's really kind of my best description of it. It is stuff that I find interesting, fascinating, controversial, but to be clear, it's not a news source. I really view it as for investors, long-term investors, really thinking about the next weeks, months, years, and decades ahead.
And you are known for not making predictions.
Correct. Yes, that came about very early in the process.
So that's good. We're on the same page there. And the funny part about this is I've gotten probably 3 to 4 requests in the last couple of weeks from media friends of mine. Hey, come on, can you give us predictions for next year? And because that's what the people want. And of course, the only reasonable answer to that is no.
I don't know.
I don't know. Yeah, stuff will go up, stuff will go down. People who sell will lose money.
Yes.
Yeah, that's just sort of how it works. So abnormalreturns.com, I encourage people to go check it out. You aggregate sort of the best things going on out there. And you've been an individual investor for the last 25 years or so?
I have been in and around the financial markets ever since I graduated from college. And so that tells you how long it's been. So it's been a good 30 years.
All right, so here's what we're doing this week on the show. Sometimes we do personal finance topics. I view investing not necessarily to be in the personal finance space. I sort of see it's adjacent to it. So today we're doing all investing. We're going to do the top 8 because we're going into 2018. You see what we did there?
Perfect.
Top 8 financial sort of investment stories of the year. Where do you want to begin?
I want to start with the stock market. I mean, that is everybody's focus, and that is whenever you open up the newspaper or open up the interwebs, that's where people start. So let's start with the stock market. And the thing that I have found fascinating about this year is not necessarily the gains in the market, which have been significant by any stretch. It has been a great year for the domestic stock market, whether you want to say S&P 500, NASDAQ, take your pick. What has been fascinating has been the lack of volatility. And by volatility, we're really talking about up and down in the stock market. And as of last count, 2017 is going to have a record number of new all-time highs.
You sound like someone I've seen on Twitter.
It is going to have one of the lowest drawdowns, which is the kind of a fall in the market from a peak. And really, volatility by any measure is extraordinarily low, which again, maybe in and of itself isn't surprising, but when you look at the background of the world in which we live, is absolutely fascinating.
So Tadas, I'm gathering from this that your number one takeaway from 2017 is we saw abnormal returns.
We absolutely
go figure.
Absolutely. In terms of the market, it was a surprisingly calm year, and which I think for investors is a great thing, because we know the one thing that investors have a tendency to do is get shaken out by market movements. When the stock market goes down for whatever reason, investors have a tendency to bail out on their previously thought out plans, which in the long run is usually a mistake.
All right, so I'm going to ask you a question that sounds like I'm asking you to make a prediction, but I'm asking you not to run out of the studio. I want you to stick through and hold. Nicole, grab the straps. We're keeping him here. Okay, we're playing hypotheticals here. Let's say we get to a point politically where the Trump administration has an abrupt ending. I don't know how else I want to say it. Let's just say that, okay? I will give my take. I feel this year's market has proven to me it is possible that the market just views that as a blip and keeps on trucking. Do you think that's possible, or do you think the removal of a president by whatever means abruptly prior to the end of his term has to result in market chaos?
I think in that particular scenario, I think you're going to have some pickup in volatility. I think any historical precedent would tell you that whether it be, unfortunately, whether it be assassination, resignation, even scandal writ large, I think you will likely to see greater volatility. I think that's probably a given. Again, 2017 would argue against that, because given all of that we have seen, you would think that we would have seen greater swings in the market, some periods of nervousness. But I think you're right in sensing that tension's building up. There's no other way to. I don't think there's, however you look at it, from whatever sort of partisan perspective, tension is building in the system.
Yeah.
And it's just a question of how and when it's released.
Do you think the market's overvalued right now?
I think I think you have to answer it one of two ways. I think one is, by any historical sort of measure, it is overvalued.
Right.
I don't think there's any sort of, you can't argue with those sort of numbers. But I think the other thing that was interesting, and you and I spend a fair amount of time on Twitter, and this was a topic that kind of came up from some of the people that we follow and listen to. Everybody says that, to a person, whether it be professional, individual, that returns going forward for the stock and bond markets are going to be lower than average. And so whenever you hear everybody saying one thing, you just have to perk up your ears, and it kind of gets your contrary juices flowing, and think,
Totally.
What am I missing? What are we all not seeing? What is out there that that is glaringly obvious that everybody is avoiding? And I don't know necessarily what that was, or what that is, or what that was. And I think this year you could argue, was backed by, frankly, good economic news here and abroad, which is translated into better than expected earnings. So from a fundamental sort of perspective, this year is not anomalous in terms of the market saying, hey, things aren't that bad in the corporate world writ large. And so if we see that continuing, and back in 2009, when the world was coming to an end, nobody would have said at the end of 2017 you will have experienced a tripling in the stock market and overall good tidings. The unexpected can certainly happen.
The way I view 2009, and my daughter was born in March of 2009, I think of the beginning of March of 2009, we were all just going, what is going on? And by the end of March, we'd turned, but no one knew it and no one could feel it.
That is the ultimate challenge of market timing.
Yeah,
that is,
right.
The challenge of market timing isn't getting out when things are good. The challenge is getting back in when things look bad.
So as we record this show, and we recorded the Friday before Christmas, we're taking the week off next week. The show is going to be airing on New Year's Eve for the first time. As of now, the recording of the show, S&P's up about 20% for the year. So unless it goes wacky in a short trading week next year, 20% returns, man, I mean, can you imagine being a 23-year-old like producer Nicole, starting your 401k for the first time, and you're putting your earliest money in, and you got 20% your first year in?
Ironically, Nicole should be hoping for 20% declines, not 20% increases. She is at the beginning of her career, and she has a long time to save and invest. And the best thing for her would be a 20% decline and not a 20% increase.
So she can buy at the proper valuations, allegedly.
Proper, lower, however you want to do the math, she would be able to purchase more shares at a lower valuation, for sure.
Before we go to break, I want to hit the next top story of 2017 from an investment perspective. If you're just joining us, we're talking to Tadas Viskanta, editor at, what are we calling you?
Dishwasher
at abnormalreturns.com. You also teach a finance course at Butler, is that
I do.
correct?
I'm an adjunct at Butler.
Excellent. I can barely spell adjunct. That's why they don't let me do it. Story number 2.
The one thing that we have been speaking specifically about the U.S. stock market exclusively in this segment, and the one thing that is maybe surprising to people is that over the last 12 months, the international stock markets, whether they be developed or emerging, have actually done better than the U.S. stock market, which has been a change in trend over the last 3 or 4 years. The U.S. stock market has trounced the international stock markets. And this has been a year, whether you want to describe it as a year of catch-up or whether you're in trend change, this is the year that global diversification has actually paid off and has not been a hindrance to people's returns. And diversification doesn't pay off every year. By any means, but I think any prudent investor recognizes that diversifying your assets in the U.S., stocks, bonds, and also overseas makes sense. And this is a year where it has made perfect sense.
Yeah, the Asian markets, like you said specifically, are right there, if not higher, in many cases than the U.S. markets. And of course, you can't not mention the FTSE, just because I like saying
it is fun
the
to
FTSE.
say.
It's a lot of fun to say.
And Brexit.
Yeah, Brexit. I mean, there's just the words you got to say. So yeah, it's funny. I remember back when I was in the investment business years ago. Oddly enough, I had more hair then, and I think I had to exit because it had fallen out in 2007, 2008. I remember this whole thing about like how much of a portfolio should be international, and then the old sort of colloquialism was, just look around your house. Look where the product's made. And that was just like, this seems like sort of a gross way to diversify. Do you have set feelings on how much of just sort of a balanced portfolio should be international?
I don't really have. I really don't have a set feeling. I think you can go one of two ways. I think there's something called, not to get technical, but it's something called home bias. And that's not unique to U.S. investors. It is a global phenomenon in every country. People have a tendency to invest in those things that they know well. They invest in those brand names. They invest in those companies that they know well. So I think just the fact that you take that step towards diversifying internationally, I think is a good one. And whether that, I could argue all the way from anything above zero all the way to 50% of your portfolio overseas. And so I think anywhere along that spectrum, whatever you feel comfortable doing, I think is a great first step. And I think trying to optimize and say, oh, it should be 23.7% of your portfolio is not only just a waste of time. I think it gives people some sort of false comfort or false precision that there's some sort of right answer out there.
Speaking of false comfort, let's take a break. I don't actually know how that relates. It just seemed like I needed a segue.
No, you need a segue.
I went with it. Let's take a break. Tadas Viskanta from abnormalreturns.com, adjunct finance professor at Butler University, will join us for the entire show. So we'll be right back on the $1 Million Plan. I'm Pete the Planner.
Hand on the beat. Yes, sir. Glass House. Yes, sir. Mr. Kinetic, Rusty Redenbacher. ATFU.
Back on the $1 Million Plan. 2017 investment wrap-up with Tadas Viskanta of abnormalreturns.com. You guys are a popular site. Anytime you link to us, and by the way, that's not like me saying link to us more, our traffic flies up.
Well, I'm glad. That is one of the benefits of having kind of this platform. Is I like to be able to highlight good stuff, and that is obviously a great side benefit. And one of the best things I hear is when I hear from people who are just kind of starting out, and I link to them, and like you said, they get traffic and additional readers, and that's always gratifying.
No, excellent. Well, we do investment review, 8 biggest story of the years. We talked about the market. Clearly, the stock market in general. We talked about the international markets and how they've not only kept pace, but in some instances outpaced the domestic markets. Story number 3, Tadas. What was story number 3 for you?
I'm going to ask you a question.
Oh, please do.
Let's hit the rewind button 2 years ago. What was the yield on the 3-year Treasury bill, which is what the government pays to borrow money for 3 months? Essentially, what people call it the riskless asset.
It was. I'm going to answer it in sort of an anecdotal way. It was nothing.
It was essentially zero. Yeah. If it may have been 0.01%, it may have been 1 basis point, but it was essentially zero. What's it today?
I don't even know. I should know these things. You tell me.
It's about 1.3%.
Holy cow! I didn't know that.
And so the Federal Reserve has obviously spent most of 2017 raising interest rates, which is they obviously affect the interest rates at the short end of the curve. So 0 to let's say 1 year, 2 years most effectively. And one of the biggest complaints from investors essentially since 2009 there is no return on cash.
Yeah.
Whether you want to say bank deposits, CDs, money market funds, you name, you pick your flavor of cash. It has essentially been zero for the better part of a decade. And 2017 has seen a dramatic change upward. And for those people who have cash balances, whether it's their emergency fund or whether it's just that that's just a part of their portfolio, they're beginning to see let's call it a normalization in terms of the interest rates that they receive on those balances.
Now, I'm not disagreeing with you, but anytime you say that, it sort of sets up a disagreement, though, just in general. But I'm not disagreeing with you. But I did read an article the other day that said investors aren't seeing their yields come back the way they thought they would have given the change.
That's not unusual. It takes a while for this to work through the system, and this has been we're talking about the last few months sort of phenomenon. So if you take a look at the chart, it's kind of a nice upward slope in terms of those yields, and it will take some time for it to flow through the system. It doesn't happen overnight. Whether it be a money market fund or whether it be the CD rates that you might receive from your bank. That does take some time, but it is a change, and it's a welcome change.
All right, now I want to ask you the loaded question of the week, brought to you by Don's Guns. I don't know, do we have a loaded question sponsor?
Perfect.
It seems like it. Is it still in business, the Don's Guns?
But I remember those ads.
He loved to sell guns.
God, he did.
All right, so loaded question of the week brought to you by Don's Guns. Do you think Fed policy in the last half a decade to a decade has worked?
I think you have to say yes.
I know.
I think if you asked 100 economists whether they would have kept Janet Yellen, Ben Bernanke in those positions, I think the vast majority would have said yes.
Yeah.
What they have done has. I don't think you can argue with success in a certain respect. And I think you can, of course, you can play you can be backseat driver, Monday morning quarterback, insert your cliche here in terms of what was done and when it was done. But in terms of keeping the financial system afloat, keeping the economy on the right track, it's hard to argue with what we've seen.
I agree. All right, story number, what are we on, 4 now?
We're
Story
on
number
4.
It's Papa John's CEO stepping down, right?
It isn't, but it isn't that. But it does. Well, we'll get to that in a later segment.
Okay.
But here I have another interest-related one.
Oh, good.
And it has to do with it's getting a little bit into the weeds. But as short-term interest rates have risen, what oftentimes economists and financial market people talk about this thing called the yield curve.
Right.
And so it's kind of you're looking at the yield on instruments of various sorts of maturity, whether it be all the way going from overnight all the way to 30 years. And 30 years and 10, 20, and 30 years are interesting, especially for consumers, because those are the kind of rates that affect your 30-year mortgage, maybe the most visible sort of effect that yields have on what consumers do. And those yields have, frankly, stayed pretty much flat.
Yeah,
they've gone up a little, they've gone down a little. The last couple of months they've been up a little bit. But those rates have stayed pretty steady. And so if you have been in the market for either a new home or have been looking to refinance your mortgage, 2017 has really given you ample opportunity to get that, to kind of get that accomplished. But what it has done is called, in technical terms, it has flattened the yield curve. And it's something to keep an eye on. I don't think it's an issue as of New Year's Eve 2017, but it'll be something to keep an eye on as we move forward. A flattening yield curve potentially has often been associated with economic recessions, and economic recessions are oftentimes associated with stock market decline. So I think it's just something to keep an eye on. It's not something that a typical sort of consumer is going to worry about or going to. It's not going to be on their Yahoo Finance page, but it is something to kind of keep an eye on.
A phrase I heard a long time ago, and I go back and forth of thinking it's a genius idea versus, well, it's not exactly the case, is the recession isn't a problem, the recession is a solution to a problem. How do you feel about that tight little idiom?
It is a tight little idiom. I think, I think there is a certain class of economists who would say, look, recessions happen because you have some sort of imbalance
Right.
in the economy. Unfortunately, oftentimes it's a buildup in leverage in some sort of sector. So 2006, 2007, we saw leverage up the wazoo in the residential real estate market, and we kind of know how that played
Oh,
out.
yes.
And so that was a very unfortunate sort of situation. If we go even farther back, if we go look at the dot-com bubble, frankly, there wasn't a whole lot of leverage. There was obviously people who had, there were wealth effects from the stock market, but there weren't a ton of people borrowing money to buy shares and therefore kind of having their hat handed to them that point. So I think leverage is clearly a big part of what a recession does is it resets, whether it be from the corporate side or whether it be from the individual side. And yeah, I think recessions happen. I don't think there's no iron law of economics that says a recession has to happen.
Right.
And so there's usually something, some might say it's a policy mistake or some other thing that's going on in the economy that needs some fixing. And unfortunately, it takes some, like a lot of things in our lives, it takes some pain to fix those problems.
All right,
So.
unfair question alert. An unfair question is brought to you by, I guess we shouldn't have an unfair sponsor. If we go into recession within the next couple years, which it could happen. I mean,
Absolutely.
it could happen. And I read a piece the other day that said it's going to happen. But again, we get into predictions. You think Trump blames Obama?
Yes.
Okay, of course. It's totally unfair question.
That's
Might be a fair question.
If not, insert other name here.
Yeah, right. Okay.
You
And you know what? I would have to say, it's not like if there was a recession in 2 years, that blaming someone doesn't actually make sense of past president, because it's not like it would be the current president's fault. We're not to the point. It's not that binary where, oh, recession happened on your watch, you're an idiot. Like, it doesn't really work that way. It shouldn't work that way, in my opinion.
Oh, it shouldn't work that way, but I think that's certainly, a big chunk. That is certainly the narrative that would play out, and the degree to which that would affect the electorate would be interesting to see. But at what point does a president own their own economic track record? So
Well, you want to own the failures and the successes. Next, biggest investment story of 2017. What do you got?
Bitcoin.
Bitcoin. Cryptocurrencies. We've had an entire show on it. I bought Bitcoin live on the air, just for fun, not much. It's weird, man. What do you think?
Oh, it's trippy. No, it's absolutely weird. And as much as I have read and written about it, I still don't really have my head around it. So you're talking to a couple of confused middle-aged guys about something we don't understand.
I have a guy in my fantasy football league that paid off his mortgage because of Bitcoin. And then you hear these stories, and then that's what scares you. It's the whole, like, if grandma brings up Bitcoin at Christmas dinner, that's like run for the hills.
Yeah.
You know?
No, we may have already seen that point, so we'll see.
Yeah. And I know you well enough to know that you want to leave Bitcoin at that.
No, actually I don't.
You don't? You want to
No.
keep going?
Sure, absolutely.
On the Bitcoin? All right, we got about a minute and 90 seconds left in this particular segment. I'm curious, do you think it sort of just meanders along, or will there be an event that changes everything?
I really don't have any idea what's going to happen with Bitcoin. What's fascinates me is that Bitcoin it's essentially you've taken an entire market cycle and just squeezed it into a really short period of time. You've seen all the best and worst of a market cycle in a really accelerated sort of time period, which is fascinating for me from just kind of a market geek sort of perspective, but also from anybody who has either been watching it or trading it or anything like that. It gives you it's like markets 101 all squeezed together. It's like a little mini course in markets, and that's the part that really fascinates me. As to its eventual either price level or utility or any number of hundreds of others of cryptocurrencies out there, I really have no idea. I know that the ICO boom, the initial coin offerings, I think has already been a bit of a disaster for investors. So, but Bitcoin itself, I think, is absolutely fascinating.
I've been investing since I was 14 years old in individual equities, so that's now 26 years. And owning just a hair of Bitcoin, I have never felt more compelled to look at prices than I do right now. It is as a pretty disciplined investor, I feel out of control weird.
No, well, that's why Coinbase, which is the kind of the major, the leading sort of purveyor place where you can buy and sell and hold your cryptocurrencies, this week was the #1 you downloaded app on iOS. So for people who have the Apple iPhone, and that just blows me away. I mean, more than Facebook, maybe than Instagram, you name it. It was the most downloaded app.
All right, we're going to take a break. We're with Tadas Viskanta from abnormalreturns.com, abnormalreturns.com. Here's what's going to happen. After the show's over, you guys are going to email me like you always do and say, who was that? I was driving home from Dublin, Ohio. Tadas Viskanta, abnormalreturns.com, Google abnormalreturns.com, or just type it in. We'll be back on the $1 Million Plan. I'm Pete the Planner. Back on $1 Million Plan, Pete the Planner, joined by Tadas Viskanta. I just keep saying your name because it's fun to say. I've pronounced it correctly most of the entire time.
Absolutely.
Do you ever look
100%.
in front of the mirror and surprise yourself and go, Tadas? Do you ever do that?
No, I really don't. I look in front of the mirror and I look at gray hair and I said, where did all that come from?
Well, you got 5 children.
Yeah,
That's where it came
that's
from.
part of it.
Okay, so top investment stories of 2017 is what we're doing today. If you've missed any part of the show, go to petetheplanner.com/podcast. You can listen to it. You can go to petetheplanner.tv and watch us. I mean, what's there not to enjoy about that? Yeah, you got logos and things and lights involved. Will this make a link on your site?
Absolutely.
Because you're on it.
Yeah.
I mean, you could.
It's got to be good.
Yeah, that's the way I view it. Two big stories left of 2017. Do you feel like Dick Clark or like a Anderson Cooper or anything right now? Like a countdown situation?
No, not really. I think it's,
Seacrest?
I'll take his bank account.
Yeah. You had good hair. You're sort of a Seacrest situation. I don't know.
I'm a middle-aged man, so
Well,
they don't.
there's nothing wrong with that. Don't say it as a pejorative.
They don't want me to host those type of shows. So.
They're only hosted by middle-aged men.
Yeah, and they're all getting kicked off
I know,
for
that's
very
touching.
Specific reasons,
It's
which I think might be outside the purview of this show. So.
Yeah, or one of the top investment stories of the years of all the pervy men getting kicked out of roles of power. I mean, there's got to be some sort of economic impact to that.
Well, the economic impact is these guys had some very big paychecks that are no longer coming in the door.
No, it's great. So next story, what is it?
I'll call it the Big Four. You could maybe round that out to the Big Five or Big Six, but we're really talking about the big technology companies. We're talking about Apple, we're talking about Google, we're talking about Facebook. We might be talking about Amazon. We're talking about Amazon for sure.
Yeah.
Maybe Netflix. You might throw Netflix in there for fun. But these companies not only have, I think it's really been interesting because for a long time these companies were kind of viewed as upstarts. They were kind of viewed as the hip, cool companies that were really transforming the world, and frankly, they succeeded. They have transformed the world. If you want to advertise online, you're either going to go to Google or you're going to go to Facebook.
Isn't it something crazy like 97% of all advertising dollars are Google or Facebook?
Yeah, once you start, because when we're talking about Facebook, we're talking about Instagram, we're talking about WhatsApp. It's not just kind of the your father's sort of Facebook. You're talking about a whole network of things. And the same thing is with Google. And not only have these companies succeeded, those four specifically are in the top 10 in market capitalization. So they are 4 of the 10 biggest companies in the United States and by extension the world. And frankly, it's kind of mind-blowing if you look at it from that sort of perspective, but also this is really, it's more than just a financial story. It's a technology story. It's a cultural story. We've talked about politics a little bit, and you can't really talk about Facebook without talking about politics to some extent these days. Less so with Google, but I think it's really, it's a year in which we've seen these companies we've seen kind of the best and worst of them. And I think this is a year in which I think the cultural and sort of political sort of mindset about them is changing, and I think they're not being viewed as these kind of happy-go-lucky upstarts, they're kind of viewed as being the powers that they are, and they all have hired dozens of lobbyists in Washington, D.C. to look out for their interests. And I think the backlash is here and is probably growing to a degree.
Yeah, it's darkened, right?
Yeah, absolutely.
So a couple of things there. Number one, when I think about those companies, I think about how I always think about. Do we have to disclose if we're talking about these, like who we're invested in with these? Is that an appropriate thing to do? Do you do that when you do these things?
I do. I don't know. I don't own any individual stocks. Everything
Okay.
everything is either an ETF or a mutual
Okay.
fund.
I own Apple and Amazon. I should
Okay.
say that. Okay. I don't know. I don't know why I felt the need to say that. It feels like the right thing to do. Apple. When I think about Apple, I think about they're hoarding cash. I mean, it's just disgusting. Or great. I don't know what it is. But then I think about the tax reform package just went through and this. Now companies will be able to give people wage increases and all these sorts of things. Apple could like double everyone's salary if they wanted to, but they don't. And so every time this whole idea goes through my head, that's why I'm like, this whole, and we're not getting political, but I guess we are. The corporate tax reform thing, I just get the feeling like companies are going to do what they do and they're not going to be impacted. The wages are by this tax reform package.
I think if Apple could spend money more quickly on acquisitions or technology or something else that would improve their business, they would have been doing it already. I don't think they're particularly happy about having to, stash this cash in some sort of Irish subsidiary. I think if they had a good use for the cash from a business perspective, they would be spending it.
Yeah. Do you wrap your family's holiday gifts, or you just put them in bags like I do?
I try, I try to stay away from wrapping because I have,
Several
what's
thumbs.
the opposite of green thumbs when it comes to wrapping?
No thumbs.
Snow thumbs. Yeah,
You're like a monkey.
No, it looks like a child wrapped it, which sometimes comes in handy because it's a good disguise.
I told Mrs. Planner this year, I was like, I'm going to try. I'm going to wrap. And last night I went to wrap her gifts. I wrapped the first one, and it looked like a serial killer was involved. I ran out of paper because I cut it wrong, so then I had to grab a different paper because I was out and taped to the back. Then I grabbed bags.
I have no patience for something that's going to be destroyed in 5 seconds.
There we go. Speaking of, maybe this will relate to another terrible segue. The second, or the final, I should say, second in this segment, final big story of 2017 from an investment perspective.
Well, it's interesting because it does tie in a little bit to what we've been talking about with Bitcoin, but it is I've called it for a long time the ETFization of everything, which is frankly hard to say. The ETFs have ETFs, which are exchange-traded funds, which are funds which are traded on an exchange like the NASDAQ or the New York Stock Exchange or any number of exchanges that are out there, and they trade throughout the day. And they have been viewed as sort of a mortal threat to the mutual fund industry. And the mutual fund industry slowly but surely has recognized that it is a mortal threat and have been pushing hard on launching new funds in various flavors and strategies. And I think this is not this is kind of a slow burn in a certain respect. The first exchange traded fund was launched back in 1993, so we're coming up on the 25th anniversary. So it's not exactly an overnight phenomenon, but it is it's another one of those trends that is sort of accelerating. And the tie into Bitcoin is that there have been in the last week over a dozen applications with the SEC to launch funds based on Bitcoin or exchange-traded funds based on Bitcoin. And the previous attempts of that have been rejected by the SEC. But now that we have futures on Bitcoin, that might make these ETFs more likely to be approved in 2018. But it's really, I think, represents that's just kind of the tip of the iceberg, and which is what is a really big, long-term sort of trend in the investment markets. And I think, I don't think there's any end in sight. And I think that all sorts of, if you're a responsible sort of money manager with a mutual fund complex, you have either launched an ETF or you're looking to launch an ETF in some form or fashion.
And that gets especially interesting when leverage gets involved, right? These leverage ETFs, and then which we don't have time to discuss. But here's what we're going to do. We're taking a break, come back for the final biggest waste of money of 2017. Although we could always mix it up like we do, and it could be the best use of money. We'll let Tadas choose.
Let's end on a high note.
We'll end on a high note. So it's gonna be a positive thing. That's coming back next on the $1 Million Plan. I'm Pete the Planner. Back on the $1 Million Plan. Final segment of the year. No pressure with Tadas Viskanta from abnormalreturns.com. Add to his record traffic numbers and go to abnormalreturns.com or sign up for a class at Butler University and take one of his courses.
We'll take it.
Usually we go biggest waste of money of the week, but I think you want to go best use of money of the week. Let's call the best use of money of the year. I'm going to give you that honor. What is it?
Get yourself a password manager.
A password manager.
Everybody, we all spend so much of our lives, whether it be on our phone or our computer, and we have Post-it notes with passwords written on them, and we lose them. And there's all sorts of story about people losing millions of dollars in Bitcoin because they've lost their passwords. Get yourself a password manager. It will change your life.
Okay, so do you mean like a service like LastPass or
LastPass, Dashlane, first one password, however you want to pronounce that. One the number password. Yeah. Pay a few bucks, get yourself, or try. They all have trial versions. Try it out. It'll change your life for the better.
Wow. You know, this confused some of our listeners. I'm going to tell you, this will confuse some of our listeners. But basically, you have one password, and then this password manager manages all your other passwords, and it makes your life better and safer.
It's got to be a really good password, though.
Yeah. It's not like abnormal returns 22.
Oh, jeez. I need to
We're going to change it. Oh, boy. Hey, this has been a fun year, $1 Million Plan, and that's the perspective of one person. Mine. Thank you for listening. Thanks for watching at PeteThePlanner.tv. Thanks for Tadas for joining us today. Hopefully I see you at another cooking expedition.
I'll be back at Clues Hall at some point this year. So
me too. All right. Thanks, everybody. Reminding you, as always, send you good vibes because good vibes are all that's in the budget. I'm Pete the Planner. This is $1 Million Plan.
This is where I came from. Planet Lovetron, where we drop love bombs, funk missiles, and live in soul shelters. No helter-skelter. The heat don't swelter because everybody stays cool. Left many moons ago to bring the philosophies of my ancestors to another place, God. Picked the third rock, gave me to my earth family, and told me to create, and so I am. Pen in my hand, microphone on the stand. Over vinyl, I command and demand. Magnificence in an instance, I can make you dance, cry, or love. Fly as a dove, released from Everest. The fresh is fresh, and you can call me E.T. Word to John Tesh. Let me bless this harmonic presentation. It's amazing, so amazing. I'm the reason. Salutations, I bring you Lovetron greetings from a faraway land. I am the sole controller. Put the remote down and let me take control. You're now a part of my zone, so enjoy yourself. Lovetron can restore your health. I bring you greetings, salutations. How you doing? And is that how y'all say it? The tinkling of the keys is an homage to the little star. I sojourn over poetic descriptions of sound and travel to my other world. Out of this world, spaceship on my arm took me home, fueled by the ink and the megabytes and the hypertext transfer protocol, stronger than the Skynet and the Terminator. I push faders into warp speed, glide with